Good evening. Ira Epstein, and here we are with your metal market wrap-up, and this is for Monday, and we're at the 20th of November, 2023, time 5:45 p.m. Central Time. So we're getting into thinner and thinner trade, as you can imagine. A lot of people going to leave tomorrow on their attempt to get to where they're going for Thanksgiving. A lot of people arrive a day early, as you know, spend time with the family, eat, and then they'll head back over the weekend. So look for volume to be slipping a little bit. Now, what's been behind everything is the drop in the dollar. The drop in the dollar is probably in part responsible for the stock market rally, certainly for the support the gold is seeing in the 1960s. Silver hasn't yet come alive. The copper market got good news this morning out of China that it's creating a list of 50 companies combined of state and private, and they're going to instruct the banks to make certain favorable loans, if you will, at right rates to them, trying to shore up their property market, which has been in a state of real disrepair. When we take a look at the gold market, you can see how it stayed over the 18-week moving average of closes, keeping the bias to the upside. When we look at the daily action, the market's gone into something of a trading range. The pattern has been one of lower highs, lower lows, which would change if the market were to get over the 1996.40 area. That would be an important number. Where's the battle? How often do you hear me say to you that the 18-day average of closes is what I call the line in the sand? Markets pick certain moving averages, and they like to hang at them to determine what the next route of action is going to be. Often you see this when you have like a rally and the market comes back fighting here, or a break and it comes back like it did here. Well, we've had both of that through here. And finally, when we came back, because you didn't stop really on the way down, you've now been putting that on right through this area. If the market clears 1996.40, I can make an argument for the 2014 level. On the other hand, if it drops down, I see a lot of support coming in, 1954.60, the 100-day average, down to the lower Bollinger Band. The trend is down in terms of swing line. The bias is up because the market's over the 18-day average of closes. You can see how this is all playing out in slow stochastics as well, which are sort of neutral. They were oversold. They've come back. They're sort of just hanging here and not giving you much of anything to do. In the gold-silver ratio, as long as the number stays under the 18-day average of closes, what happens? Well, when that happens, silver is actually stronger than gold. When we take a look at silver, silver got up to an area that it's chock full of resistance. It came from the lower Bollinger Band just a week and a half ago, roughly, all the way up to the 100, the 200-day average, the upper Bollinger Band. Probably more in short covering than anything else. I can't think of what the impetus would have been otherwise. It's an overbought market, void of a trend. You had a downtrend line that was finally broken and the market caught on fire. In the copper market, no, I think we're getting a base again. I think the market is saying China intends on getting serious about the property market. It is the one area that they know they've got serious troubles in. It is an area they can throw some money at. They're going to be selective. That's why it's 50 companies, not the whole property market that they have there. And that's spurred this market back up. We've talked about it, that could be the play. So far, it is most certainly looking like it. It should have very stiff resistance, though, from right here, today's rally into the Bollinger Band. First, it was this number, the 100-day average in the Bollinger Band. You see that. That was where you were on Friday. You went a bit further today. You might be going up to 384.25. The 200-day average, but I wouldn't be telling my clients, hey, reach for it. You're on your way to the 400 level right here. Now, it did help that a number of the copper associations came out and explained that we are still in a large deficit in terms of production, and they expect it to stay that way through demand, staying in that way in the deficit area. In the platinum market, we rallied back up from this low right here, fought a battle at the 18-day average, climbed to the next resistance, the 100. Do we have a trend that's tradable? Very difficult. You came straight down, hit your Bollinger Band, went 2 days lower, and then made your turn in the market and have been coming back up. It has been more of a vertical move than anything else, and suddenly you're in overbought territory. Most certainly, I would be looking for the argument that if, the word is if it had a strong rally, anywhere from 964 to 72 is going to be the problem. I had told clients, my subscribers in the morning, you cannot be short, even though the trend was down, because the market's saying to you, get short in the 906 area, but put stops $40 away. No, too much money to risk is what I told them. And in the dollar index, you be careful of too much of a good thing. The market's been coming down. It's in oversold territory between the 100-day, the Bollinger Band, and the 200, back to the 103.04 area. Would not surprise me that the market starts to see some profit taking. I am not looking for a market turn. Profit taking is very different than getting this big run to the downside that we've gone through over the past week. So when you put it all together, you got to understand, number one, where you're at right now, holiday-type markets. You get another day of this type of volume tomorrow. It'll be even worse on Wednesday. We're not open on Thursday. The trade will be, I would think, light on Friday and getting back to normal as we come back into the markets on Sunday night, which is a good time for you to take advantage of any of the free offerings we have. You want to see our price count charts. We did price counts today on the US dollar index. So this is one of the markets you look at to see where the first price count is, just below the market right now. But you want to see the chart. The probabilities of hitting first counts are very, very high. Doesn't mean they have to be hit, but they're very high. Our market charting software, by the way, if you get the QT version of this, price counts are in it. You can do your own, and we have created a free course for you to give that a try as well. But you want to take a look at all the rest. How do you do that? You go to iraepstein.com, go to free offers, or move your cursor to the top up here, give it a click, and away you go. I'm Ira Epstein. You have yourself a good evening. I'll talk to you all first thing in the morning. Take care.